Bitcoin has long been the cornerstone of the cryptocurrency world, serving as both a symbol of innovation and a benchmark for the entire digital asset market. Since its inception, Bitcoin has captured the imagination of investors, technologists, and the general public alike, becoming synonymous with the idea of decentralized money and financial freedom. Often referred to as digital gold, Bitcoin is valued not just for its scarcity and security, but also for its role as a store of value in the digital age. Its limited supply and decentralized nature have made it a hedge against inflation and economic uncertainty, much like gold has been for centuries. Historically, Bitcoin's price movements have set the tone for the entire crypto market, acting as the tide that lifts all boats. When Bitcoin surges, it often triggers a wave of optimism and investment across the sector, while sharp declines can send shockwaves through every corner of the market. However, the crypto ecosystem of 2025 is vastly different from its early days. Projects like Ethereum and Solana have developed robust ecosystems, offering smart contracts, decentralized applications, and new ways to interact with digital assets. These platforms have attracted developers, users, and capital, expanding the possibilities of blockchain technology far beyond simple peer-to-peer payments. These altcoins are no longer just experimental tokens. They now support thriving decentralized finance, DeFi platforms, global payment systems, and entire digital economies. Their growing utility and adoption have made them essential components of the modern crypto landscape. This maturity among altcoins challenges the old market dynamics, suggesting a fundamental shift in how capital flows within the crypto space. Investors are no longer just following Bitcoin's lead, they're evaluating a wider range of opportunities and risks. Instead of the familiar cycles of temporary altcoin seasons, there is growing evidence of a more permanent diversification of capital, especially as institutional investors enter the market. These large players are allocating funds across a broader spectrum of digital assets, seeking both growth and stability. In this essay, we will explore the concept of Bitcoin dominance, analyze the latest data that highlights this ongoing capital shift, and discuss what this final rotation could mean for the future of crypto investing. We'll look at how these changes might impact both new and experienced investors. The established pattern of capital flowing into Bitcoin first, then trickling down to altcoins, appears to be undergoing a structural change. Understanding this evolution is crucial for anyone looking to navigate the rapidly changing world of digital assets. Bitcoin dominance, often abbreviated as BTCD, is a key metric that helps investors and analysts understand the balance of power within the cryptocurrency market. It measures the proportion of Bitcoin's market capitalization compared to the total market capitalization of all cryptocurrencies combined. In other words, it shows what percentage of the entire crypto market is made up by Bitcoin alone. When Bitcoin dominance is high, it means that Bitcoin holds a larger share of the total crypto market value, often signaling that investors are seeking the relative safety and stability of Bitcoin over other, more volatile cryptocurrencies. This typically happens during periods of uncertainty or market corrections, when traders move their capital into Bitcoin as a safe haven, causing its dominance to rise. On the other hand, a low or falling BTCD suggests that investors are becoming more confident in altcoins, cryptocurrencies other than Bitcoin, leading to increased capital flowing into these alternative assets. A significant drop in Bitcoin dominance is often seen as the beginning of an altcoin season, a period when altcoins outperform Bitcoin and experience rapid price growth, sometimes even outpacing Bitcoin's returns. In 2025, the ongoing downtrend in BTCD is not just a short-term fluctuation. It's being driven by a fundamental shift in how institutional investors and large funds are diversifying their portfolios, allocating more resources to promising altcoins and blockchain projects. This makes the current decline in Bitcoin dominance especially noteworthy, as it could signal a more permanent transformation in the structure of the crypto market rather than just a temporary trend. Understanding the trends in BTCD is crucial for anyone involved in crypto, because these shifts have historically been reliable indicators of major changes in market momentum and investor sentiment. Time and again, a sustained decline in Bitcoin dominance has preceded explosive rallies in altcoins, making it one of the clearest signals for the start of an altcoin season and a potential opportunity for investors. As we look at the current market environment, all signs point to a more profound and lasting change in the crypto landscape, with Bitcoin dominance playing a central role in shaping the future of digital assets. The final rotation theory suggests a permanent shift in how capital is distributed in the crypto market, Previously, money flowed into Bitcoin, then rotated into altcoins. In 2025, capital is moving directly into altcoins as a long-term diversification strategy. Projects like Ethereum are now productive platforms generating fees and supporting digital economies. Regulated financial products for altcoins allow institutions to allocate funds directly, altering old capital flow patterns. The market is evolving from a single-leader system to a multipolar one, with several major networks commanding investment flows. This rotation reflects a strategic reallocation of capital toward a diversified portfolio of digital assets. Evidence for this final rotation is visible in the hard data of capital flows throughout 2025. Institutional money flowing into exchange-traded products, ETPs, is compelling evidence of the final rotation. In 2025, global crypto ETPs attracted a record-breaking $48.67 billion in net inflows. While Bitcoin ETPs received $30 billion, this accounts for only 62% of total inflows, down from 86% in 2024. Ethereum ETPs raked in $14.1 billion, representing 29% of all crypto ETP inflows. This surge is due to Ethereum's utility in decentralized finance and its role as a foundational layer for Web3. Other altcoins, like Solana and XRP, are also attracting significant institutional capital. This diversification marks a new phase of maturity for the industry, with a more resilient market structure. Institutional capital is becoming more discerning, strategically allocating funds to specific projects with clear use cases. Bitcoin's dominance in institutional investment is waning, with its relative market share shrinking. Once the undisputed leader in the crypto space, Bitcoin now faces stiff competition from a variety of other digital assets. Institutions now have a menu of regulated options, choosing to build balanced portfolios from the start. This diversification strategy is driven by the desire to mitigate risk and maximize returns. The launch of US-listed spot crypto ETPs with staking capabilities has been a game-changer. These products offer a new level of accessibility and convenience for institutional investors, making it easier to include a variety of cryptocurrencies in their portfolios. Staking allows investors to earn yield, making assets like Ethereum and Solana attractive. This yield generation is a significant factor in their growing popularity, as it provides a steady stream of income in addition to potential price appreciation. Bitcoin's proof-of-work model doesn't allow for staking, putting it at a disadvantage. This energy-intensive process is also facing increasing scrutiny from environmental advocates, further complicating its position in the market. The shrinking slice reflects a more educated investor base, recognizing different investment theses. Investors are now more informed about the unique value propositions of various cryptocurrencies, leading to a more nuanced approach to portfolio construction. Bitcoin's role is evolving from being the entire market to being the market's anchor. It still holds significant value as a store of wealth and a hedge against inflation, but it is no longer the sole focus of institutional interest. The institutional pie is growing larger and being sliced more equitably among top-tier projects. This diversification is a positive development, indicating a maturing market that is better equipped to handle volatility and capitalize on growth opportunities. This marks a healthy evolution for the asset class, transitioning to a strategic allocation across a new technological sector. As the market continues to grow and evolve, we can expect to see even more innovative investment products and strategies emerge. Technical analysis of Bitcoin dominance, BTCD, shows a major trend reversal. The BTCD chart peaked at 61.53% in November 2024, then showed signs of exhaustion. It broke down from a long-term ascending wedge pattern, signaling a downward trend. The relative strength index, RSI, and MACD indicators confirm a bearish momentum. Historically, these signals have preceded major altcoin rallies. Analysts are watching key support levels on the BTCD chart. A decisive break below 51.20% would confirm the downtrend and trigger capital into altcoins. This could potentially trigger the full-blown altcoin season many anticipate. An altcoin season is when altcoins experience rapid price appreciation, outperforming Bitcoin. This is driven by a shift in market sentiment from Bitcoin to higher-risk altcoins. The cycle starts with a strong Bitcoin rally, then profits rotate into major altcoins. If altcoins perform well, capital flows into mid-cap and small-cap altcoins, creating a market-wide frenzy. Social media buzz and project announcements add fuel to the speculative fire. The current market environment suggests a more profound and sustainable rotation. This rotation is led by institutional capital and supported by developments like ETPs and staking yields. It indicates a long-term rebalancing of the crypto market, not just a fleeting bubble. A confirmed altcoin season depends on key technical milestones. The first is the continued decline of Bitcoin dominance, BTCD, below 51.20%. A sustained move below this level would signal a shift toward the altcoin market. The second involves the total altcoin market capitalization breaking out to new highs. Analysts project a breakout could send the altcoin market cap to $219 trillion. Reaching this level would confirm the inflow of capital into altcoins. The checklist is simple. Watch for BTCD to break below 51.20% and altcoin market cap to hit new highs. If both events happen, the final rotation will be confirmed. The evidence in 2025 points to a pivotal moment in crypto history. The decline in Bitcoin's ETP inflows and growth in demand for altcoins signals a fundamental shift. Investors are strategically allocating capital across diverse blockchain technologies. The new landscape requires a change in perspective and strategy. The market is evolving into a multipolar one, with several large-cap networks performing independently. This diversification creates a healthier, more competitive ecosystem. The final rotation is an ongoing process, with technical and fundamental indicators aligning. The era of Bitcoin's solitary rule is ending, and a decentralized market landscape is emerging.